Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guests today have almost 20 years of real estate investing experience and have bought and sold over $40 million of real estate in the past 5 years, overseeing $5 million in renovations. Kyle and Ashley Wilson are the founders of Bar Down Investments. Guys, welcome to Purchase to Profits. It's great to have you on the show.
Likewise. Thanks for having us.
Yeah, it's my pleasure. And first of all, props for the name. I love Bar Down Investments. The name's great.
And one of my few contributions to the whole startup of the company.
That's right. Well, maybe we'll have Ashley move over to the center, and then we'll put you in.
Yeah, exactly. I'll just be back over here.
Yeah, awesome. So let's kick things off and talk about your real estate goals right now.
Well, right now we actually have two businesses. We have a high-end flipping business called How's It Look, and then we have a multifamily business called Bar Down Investments. And each of them have two different sets of goals. We're continuing to pursue single-family houses that we can renovate. We focus on higher-end homes, so we're still pursuing homes, not really expanding that business, but just keeping the momentum going with that business. Alternatively, with Bar Down Investments, we're looking to expand that business. We currently have 450 units, 101 of which we're passively invested in, and then the rest of the units were GPs on two deals. Mm-hmm. So on those properties, we've done construction and asset management, and we'd like to build out that business further. So if that takes the shape of partnering with other teams, we are completely open to that, but we are also pursuing deals on our own too. So we're looking to take the business to the next level over the rest of the year, and then extrapolate that further come next year and the following years.
Yeah. And what made you start looking at multifamily real estate? Because your flipping business was going well. What prompted you to shift gears?
So approximately 2 years ago, Kyle retired from being a professional hockey player, and he was at the end of his career. So the last 4 to 5 years, we were actually living overseas. So it was really difficult for us to get into another business. We had operated the flipping business pretty successfully from overseas, but to go into the multifamily space or any other space of real estate was just a little bit more challenging because we didn't have all the fundamentals there to launch the business. So about 2 years ago, once Kyle retired, we started having conversations about what was the next best avenue for us to pursue. And it took us probably 3 months of diving into multiple different avenues of real estate to figure out what was the best fit for us. So we considered single family rentals, we considered storage units, notes, hard money lending. Literally every single aspect of real estate you could possibly think of. Mixed use buildings, literally everything, mobile home parks, and we landed on multifamily for a lot of reasons. I think that everyone's background and their familiarity with moving into a different space is different, and also to their risk aversion level also plays into that too.
And one of the things with house flipping is it's a little naive to think that, house flipping is going to be a great business to be in through every type of market cycle and every stage. Mm-hmm. And for us to kind of have all of our eggs in that one basket, especially when, I know the recession has been 2 years away for the last 4 years, but, at some point people are probably right. There should be some sort of correction. And, what is the landscape going to look like for flipping houses at that time? We don't really know, but we can, you can guess that it's not going to be the same. So we like to diversify into some other are there avenues that during a recession might have a little bit more staying power than flipping houses?
Yeah, for sure. And what was it like when you guys were overseas, Kyle, you were playing? What was it like managing a business from across the ocean? Because I think you guys can offer a lot of good tips for somebody just in terms of structuring management and how you keep track of everything.
That's all you.
Well, Kyle was busy playing and I was focusing on the business, but as long as you put in systems and tools that help you. So one of the things that I always talk about is we always leverage technology pretty well. So a lot of people think, how did you even see the house? Well, you can utilize FaceTime for that, or some sort of video streaming system that you can physically walk through the house, whether it be with your realtor or a partner. In this case, my partner was my father. So it was very easy for us to communicate about these houses. In terms of analysis, you can do an analysis no matter where you are in the world, as long as you know that market. But the resources that are available to you online make it pretty easy to know any market right now. You don't really have to be boots on the ground to know a market in this day and age with all the technology that we have at our fingertips. So there's that support. And then also too, developing tools that help with the communication pathways. So if that comes by means of a tracker, whether that's your scheduling, your budget, the plans in terms of what the finishes look like. A lot of people were really surprised that I did the design from Europe and my dad implemented the design. A lot of people are really confused by that, but it's all about being able to communicate vision. So if that takes the form of having pictures that you send to your partner who's boots on the ground. But all of those tools, whether I knew it or not, have actually laid the groundwork for what we're doing today on the multifamily space. Because I lead construction and asset management on the properties that we have now. And without that foundation on that single family, I never would have been able to implement it to the level that I'm able to implement it today on the multifamily side. And I know there's arguments on both sides on whether or not you have to start off small and do a single family before multifamily. In my particular case, I think that it created a huge advantage to have that experience and parlay that into the multifamily space.
Yeah. And so what sort of maybe mistakes or missteps do you see people making when it comes to approaching the construction management side? Because I know that's where a lot of people get into some trouble where they don't have the background or they make some critical errors when planning out a project.
So I think that's twofold. I think the first mistake that people are making is they're not having someone who has construction experience on the GP side. And I think that that is a result of people being very greedy of the GP division of ownership. And I think it's very short-sighted. If you understand the mathematics of multifamily and how the power of the cap rate works and your NOI, you would understand too that outsourcing construction management and paying a fee that is a percentage of the total cost of that renovation creates misalignment from the alternative, which is having someone who's on your GP understand multifamily and how the less CapEx money you use, but the higher ROI you achieve actually equates to an exponentially increase in the value of the total property and therefore your returns. So I think that's the number one mistake that people are making. And the more syndication teams we come across, I'm very perplexed as to why people are choosing to invest with a partnership group that is going after these major value add projects with no one on the team with construction experience. It's very kind of alarming to me, because even when you own a single family residence for a year, you're not going to go through a year of ownership without something coming up. So you extrapolate that to hundreds of units across a longer period of time, you really should have someone who has construction experience. So that's the first mistake I think people are making. The second mistake is assuming that 3 bids is a competitive bid process. And the reason for that is because I think people take the scope of work of the first bid and they send that to two other two other contractors, and they assume that that's a competitive bid process, where they don't realize that there's more than one way to solve a situation. And if you have construction experience, you can then negotiate different ways on how to solve it with getting a better ROI. So there's things like that. There's contract negotiations, there's understanding pricing. All of those things are, the reason why you should have a construction manager on your team.
I mean, at the end of the day, we're in, the golden age of apartments. And so there's a lot of people out there teaching other people how to syndicate apartments and how to do this. And the problem is that construction management, asset management is such a huge topic that the amount of time that they spend people, teaching how to raise money, how to, just the basics of the deal and how to get started in that. If they were to spend that much time on construction and asset management, then, as a business model, it just wouldn't work for teaching these people. So what they do is they just say, okay, outsource that to property managers. Property managers will do that for you. And so you have all these people who are coming from different fields, maybe they're engineers, maybe they are in real estate or single family, and they're learning from these people how to syndicate apartments. And they don't understand how big of a field the construction management and asset management is, because they've never been taught it. So that's, it's not necessarily their fault, but it's just kind of the way our business is, that there's so many people in the market now that's the way they've gone through it.
No, well, 100%. And I know firsthand with my experience on the single family side, like the construction management and doing that stuff, like you have to actually be in the work to really learn how it goes. You can't just read a book and consider yourself, an experienced expert. You actually have to go through the process and, see those mistakes that you're making firsthand and learn from it.
Absolutely.
Yeah.
No, it's really true. And it's really easy to put together a education model system that teaches acquisition, deal sourcing, raising capital, getting to the closing table. It's easy to put together those checklists. What's not easy is teaching someone about experience over time, how to handle all of these different issues. Now, there are books out there and they are good. I'm not saying, just throw them away. They're not worth reading. There are books out there that are good at laying the basic level of information that you need. But ultimately what ends up happening is people learn the basic level information and then they outsource it from there so they can have a conversation, but they don't really understand the nuances to, the mechanicals and carpentry and all these other types of items. So really that takes a lot of experience to get that information.
Yeah. And so what sort of routines or rituals have you developed, maybe between yourselves and business-wise, that have helped make you successful thus far?
Do you want to take that? No, you So for our businesses, we have different routines, but number one is communication. So we have different touch points on both businesses on a weekly basis to ensure that we're moving forward and we're getting to the next step. So that involves making sure we have action items, minutes taken at these meetings. If you treat your business like a hobby, it's a hobby. It's not a business. If you treat your business like a business, it'll operate like a business and it'll take you to the next level like a business should. So that's the mindset that we come to the table with both businesses. And then in terms of our routines, we have metrics that we've established on both businesses that we constantly check in on, and then we track those metrics. So if that on the multifamily side, we have a basic understanding of how many LOIs will yield a property. And in order to get that funnel going, obviously we need to be vetting all of these properties and underwriting these properties to dwindle down to enough LOIs that yield the property. So that's really how we've done both businesses. We've done that on the single family side and on the multifamily side. And that's one thing that we're doing consistently.
Yeah. And Kyle, it always seems like it's either pilots or ex-sports guys who get into real estate, because there's always a bunch of, ex-professional players that end up doing real estate investing. So what do you think it is about sports and real estate that go hand in hand?
Well, at the end of the day, when it came down for me, is at some point with a professional career that the way your job is set up is kind of backwards to everybody else. Everybody else kind of starts at the bottom and works their way up, increases their salary, gets more and more and more. They save for retirement, and then they retire. Versus someone like a professional athlete or any other person, even if you build a business and then sell it or whatnot, that probably your highest earning days of your life are when you're younger. And then that actually starts to trail off. So you need to, if you're smart about it, you need to take your money and do something with it. And so, most people will just go the traditional route, and they'll have somebody take care of it for them, invest in stocks and bonds and mutual funds and whatnot. But what we came to the realization is, okay, what's the going to be the best return for our money? What's going to be something that can help us, that index to inflation and tax benefits and all these different things. And if you spend enough time looking at it, that then real estate really just jumps out ahead of all of them. There's different facets of real estate, but real estate in general just jumps out as a good retirement strategy. And so what's the way to maximize that money that you've worked really hard to make that money? What's the way to maximize your use of that money? And that's kind of how we landed on real estate.
Yeah, no, that's great. So out of all the deals that you've done so far, is there one that stands out as a keystone deal that made a big impact?
There are a couple deals that have stood out, but most notably, I like to tell this story about the deal that we first did on the single family side, and then a year to date, almost an identical property, and the difference between those two deals. So the first deal we ever did in flipping took us 9.5 months to renovate approximately 2,200 square feet. And we do full gut renovations, 6-figure renovations. So that's the space that we're in. And the renovation that we did an addition. I mean, everything soup to nuts, all new mechanicals, everything. So that's what we did on the first property. And it took us 9.5 months to renovate the house. And we made a profit at the end. And my dad, my business partner, was really ecstatic. He was so happy we made this profit because Kyle is really good at remembering statistics, but he always says that the statistics of first-time home flippers is not that great. It's like
80% of them lose money on their first deal or something.
Yeah.
So, and then of the people who make money, the majority of them make $5,000, and we made significantly more than that. We made 5-figure profits, very strong profit. So my dad was excited about this, and I said to my dad, we came to the meeting, the debrief meeting after the sale, and I said, Dad, this is terrible. This is not how we're going to be able to do a business out of this. We can't survive off of this. And my dad likes to joke. He threatened to quit, which he did. It wasn't really a joke. He did threaten to quit, but we took that experience, and a year to date, we bought almost an identical house, full gut rehab. It actually needed more work, and it was a larger house, but we implemented all of these systems, and we were able to complete the renovation in 9.5 weeks. We put the house on the market the Wednesday before Thanksgiving. We were under contract that weekend, and it was almost 6-figure profit on that house, which is a completely different ball game, when you're talking about being able to do that kind of change within a year's time. So I think the reason why this is a game changer for us is because we really realized at that moment how systems help and how being organized before you even purchase a property. A lot of people think your work starts once you have keys in hand, but that's not true. Your work starts once you have a signed agreement of sale or PSA, even before that on the multifamily side. So to us, we realized a lot of things that in that single moment that have really impacted our business and our strategy moving forward.
And also, like, you could only read so many books about it. Like, we read all the flipping books, we watched all the shows, we did, we did all the, the research that you could do. And still, we had that process in the beginning. It took going through it and taking that year and figuring out how it works for you to really, get the proper systems in and do it the way that you works for your company setup.
Yeah. And, lots of the viewers and listeners, they have a handful of properties, but they're always looking to scale bigger. So they may have done a couple flips and they're looking to acquire their first, let's say, smaller multifamily property. What sort of advice would you give them, having maybe gone through one or two flips and now going up to a larger type of asset?
Well,
go even bigger.
Yeah.
Yeah.
Like, don't go in dead man's land. Like, that's no man's zone. I always like to give I'm not a good tennis player, but I know enough to understand the game. And they always talk about when you go up to the court versus you're hitting from the back court, in the middle is no man's land. That's where you lose. That's where people lose points. That's why they're always telling you to sprint all the way back to the baseline or go up to the net. And that to me is like no man's land. That if you look at the economies of scale factor, it's very difficult to be profitable in that space.
Well, it's not difficult. It's just a lot of work. And at the end of the day, if you're doing small, when we say small multifamily, we mean kind of like 10, 20, up to like 50 units. Then the problem is you're doing just as much work as you are for a 200 unit. Probably more, because at that stage you can't afford to hire a full-time on-site property manager. So you're having to take care of it yourself all the time. So if you're looking at that space, why not, look at 150, 100, 200, 250? Like, why not go up there? Because if you have the knowledge and the ability to get into that space, sure, there's some more challenges, but it's just as hard to do that as the smaller one. So that's kind of what we've come to realize.
And if you understand the power of leverage, the ability to leverage more and to have a team around you and be able to achieve the same results with greater returns, that to me is a game changer. So, there are people in that space, and we're not trying to say not to explore that space. In fact, a way to be creative about exploring that space is, say, for example, you want to buy a 50-unit property. Well, buy the neighboring property at 40 units too. All of a sudden you have 90 units, and then there's your scalability. So it doesn't mean that you can't be successful in that space. I shouldn't have said that earlier. You can be successful. It's just it takes a little bit more creativity to figure out how to maximize your time and your return.
You eventually learn that the whole system's rigged for larger scales. And it's kind of the way that America works anyway. Like, the bigger you get, it's almost the easier it is. It's easier to get loans. Like, the larger the loan, you can start getting non-recourse loan. It doesn't even show up on your balance sheet. And it's actually easier to get those loans because they care more about the property than the actual person who's purchasing it. We always joke that, if you're that person, a lot of people like to max out their Fannie and Freddie loans and get 10 loans each. It's actually easier once you start getting to those like last 5 Fannie Freddie loans. It's actually easier to get a large commercial loan than it is to get a single family home, which, it's kind of like, when you think about it, how crazy is that? So, if there is the space for single family homes, investing in those, and it's a great retirement strategy for some people. And we just say that, and maybe you want to get your feet wet with a 10 or 20, but maybe do so with the intention of continuing to scale higher, because once you get into the higher airspace, then it actually is easier, and you could scale much quicker.
Yeah, well, 100%. And it's always interesting because I've had a couple guests come on and share their experiences about doing a $100 million deal and doing a $20 million deal. And they'll tell you every single time that the $100 million deal was way easier than the smaller deal. Yeah. And the smaller deal is actually a big deal to some people. Like, a $20 million deal seems like, a large piece of property.
Right.
So I'm really glad you guys took that answer in that direction. That's great. So how has getting into real estate changed your lives so far?
I mean, everything in general. So like, I guess it's, we have two small children. And so just our ability to, with real estate, it's good and it's bad. You can work when you want. So a lot of times that ends up being, 8 o'clock to 11 o'clock at night, because that's when the kids are in bed. But at the same time, you do have that flexibility that, whatever your family needs, whatever your kids need, you can kind of up and do it. And like, I'm from Canada. And we live in Philadelphia. So like we can pack up and we can head to Canada for 2 weeks, and we don't have to take off work to do it. We can we can go up there and just continue working as we would. And it's almost easier because my parents are both retired and they'll watch the kids. So that's when we talked before about looking back into what fields we wanted to get into. That's definitely a factor. What kind of lifestyle do you want to live? And I was listening to someone the other day that they just decided to up and move to Hawaii because they're still doing their real estate business, but now they're doing it from Hawaii. So not that we have the ability to do that, but that's kind of just a consideration that real estate allows you to that flexibility.
I couldn't agree more. I mean, the lifestyle that I wanted to live growing up, everyone has a dream of what they want to do. And growing up, I looked at what my parents were doing, and my parents both worked full time, but they always attended every event of mine and my brother's. And that had more of an impact on me than what they were actually doing. Their support meant so much to me that I knew that whatever I did as a career, I wanted the ability to always be there for my children and never have to say, I can't make it today because of this work commitment. I never wanted to have to ever say that to them. And this lifestyle provides me with that opportunity.
Yeah, no, that's awesome. And I'll have to ask you, Kyle, so we're recording this before Game 7. Do you have any predictions?
Well, I think we were talking about that the other day, and I think we have maybe 49 states cheering for St. Louis right now, just because everyone from Boston is making the joke like, oh, it's we really need this win. Boston hasn't won a championship in 4 months. And, so I think most of the country's cheering for St. Louis, but it's tough. St. Louis they got an explosive young team, but, Boston's been there so many times. So with it being in Boston, and it's tough to go against them, but I'm still I got to pick St. Louis just because I really want it for them.
That's awesome. I think Boston's going to make it happen. We'll see. We'll see.
Yeah. So. If you asked me, I had to put my life savings on it. It might be a different story, but as a friendly bet, I would go St. Louis.
Awesome. So if somebody's looking to get in touch with you guys and learn more about what you're doing, where can they find you online?
At investbardown.com. That would be for our multifamily site. And then on the single family side, it's howsitlook.com. We also have Facebook and Instagram pages for the retrospective accounts too, and you can look by their name as well.
That's great. Well, Ashley and Kyle, thanks so much for taking the time and sharing your success with us today.
Thanks for having us.
Thank you for having us.
It was my pleasure. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.